Okay, so let's get into where this could go here in the next couple of days with this meeting coming up with the rate hikes. Ahead of the bell, we had a nice increase and it was kind of trending throughout the day. And then you had a jobs report. Well, strong jobs report plus inflation, you want them both to go down to reduce rate hikes, which we had that price in the morning, but then the jobs report came in. So it's causing that uncertainty and confusion, which never works with the market. We like as investors, a clearer picture, guidance, or at least, some strong, promising estimates that we can read from data. Well, right now we were pricing in the 75 points, which I do still believe it's going to be the 75. We'll talk about where it can go if not, but we're pricing that in, and with this jobs report, not saying it could throw it off, but we were also pricing in the 75 to 50. Well, for recent numbers, and yes, we did have a slow decrease in the inflation as the last report. Was it enough? This is where he was a bit hawkish on the last video, and this time we were, I think, seeing more of a dovish Powell. Do not have that smooth landing, but we'll go into that as all the information that came up today, which is kind of, I guess, giving that uncertainty picture of where people think it might do 100 or 75 again. Let's go over this video really quick. I just want to see where it was last time. It's about a 40-second clip here. We're just going to listen in.
Price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain.
Yeah.
Restoring
See, in there he was
a
bit more hawkish and trying to get his point down to where he wants to, really decrease inflation. Obviously, we all want that. We all wanted a little bit of push earlier than this, but he wants this smooth landing. Got it. So, point is, all the information I just said, here's where I see it looking out the next couple of days. So, with the recent data, if he takes this as we're not moving down, and especially with job growth, the report coming in strong, it means there's still jobs, so people aren't working, which means they're still relying on money. And with inflation still being high and they're still not working, you also saw a huge job shift in 2021. So I think that's part of it. I don't think this is all just people being working from home or not working or independently working. Have started their own businesses. I do think a lot of it's because of a job shift, kind of a change. So that could be updated. But if this Powell comes in tomorrow and is not happy with this jobs report, and he's going to stay, really focused on that, and if this 100-point rate hike comes in, better believe it, I'm selling. I was already in 80% cash right now, but if that 100-point comes in, I'm out. You can for sure guarantee that that'll shake up the market, and not a lot of people are going to be happy about it. I do see that you'll have a little reverse, but it could be another 5, easily 7, maybe 10 drop. But I mean, it is needed. So there's that. If it does stick with this 75 points like we're pricing in, which is kind of what we do, if it sticks to that, well, then never mind. Hang on tight, ride this out, and let him do his job. But also like and subscribe if you're liking this so I can keep making more videos. But here's the other thing. The earnings also, we've not seen a huge decrease, but they are starting to miss a little bit here. And it's projected that by probably Q2, a lot of people are saying Q1, but I think it'd be Q2, second quarter of 2023, where you're really going to see a lot of that strong miss on the beat and all that because you're probably going to have a Q4 where people are still spending, the inflation is still high, they still have money, they're still out shopping like it's nothing. So when you're going to see all that price increase, you're going to have a nice earnings report. Well, they're wondering if, Apple, who is ahead of one of the strongest sectors here, if they can't keep this going and this returning consumer, well, then you are going to see a dip in earnings. And once you see that dip in earnings, you're all going to see more negative. So we have the guidance is really what we're looking for. We know we already priced in the 75 to 50, and we want to know more about what he's going to do in the next couple of months. I think that is where we need to end this, because like I said, this is like a whirlwind here. You get that 75, don't even sweat it. If he goes off and says we're going to do 2 more 75s, you're going to see probably a drop. If he does 100, get out.